Welcome everyone. Welcome to this episode of Market Trap. I have with me Mr. Pankaj Pandey, and once again an eventful week. Nifty is, a beautiful number, 25,000 on 6th of June 2025. So, and of course, we also had a big RBI policy movement which we were expecting for a while now. We'll understand all of that, sir. Let's start with the meat of the matter: RBI policy itself. What happened there, and what does the market look like right now?
So hi, good evening, Vishu. Yes, so RBI policy has been the highlight of the day or highlight of the week. I would say RBI cut rates by 50 bips and CRR by about 100 odd bips. And this was against the expectation of a 25 bips kind of a rate cut. And RBI clearly stated that they are front loading the rate cuts to sort of drive the growth. So clearly the focus is on growth. Inflation wise, they haven't done much. So inflation has been sort of pulled down to about 3.7%. Prior it was 4%. And Q1, Q2 is where the inflation has been pulled down, and Q3, Q4 is largely expected to be similar lines. And I think growth forecast for GDP is maintained at 6.5%. And I think overall, they also sort of changed the policy stance. So for example, from accommodative, they have moved it to neutral, which means that, or which implies that the further rate cuts would be limited going forward. And I think the highlight was the 100 bips kind of a rate cut. So because what it does is that while 50 bips kind of a rate cut, repo rate cut is a bit negative for banks from a margin perspective. But when you're sort of doing 100 bips kind of a CRR cut that is expected to release 2.5 lakh crores of liquidity, and that is going to sort of provide some cushion to the margin anticipated decline in the margin pressure, and that sort of really turned the overall mood of the market. And from that perspective, I think RBI has clearly sort of front loaded all the policy levers, and I think clearly NBFCs are the biggest beneficiaries of this, if I have to sort of highlight. So yes, RBI policy did most of the heavy lifting in this particular week.
Absolutely, sir. And so once again, I think Nifty is currently at 25,000 levels. It's been quite a while that we have been kind of it's a ping pong between 24 400 and then 25 100. So what does the outlook look like?
You're right. I think last 2 weeks, Nifty has been sort of taking a breather. Wouldn't say that is negative because from the April lows, we have seen a 15% kind of a rally, and markets have been sort of swinging, like you said, in a 3% kind of a band. And what we have seen this week is that Nifty is up about 1 odd percent, and the broader market continues to sort of do well. Good part is that in this week, all the interest rate sensitive sectors, be it real estate, be it BFSI, I think they have done well. Defense sort of continues to do well, and along with metals. Now, coming to Nifty levels, overall sense is that I would open the levels higher to about 25,500 kind of a level, since we are already at 21,000, 25,000. Now, support again is placed at 24,500 because this is where the markets have sort of bounced back in this particular week. So that remains the support, but let's see whether 25,100 gets taken out or not. So that remains to be seen. So I'll put a broader range of say 24,500 on the lower side and 25,500 on the higher side. And since the broader market continues to do well, the market breadth continues to sort of get even more better. So at this point in time, about 55% of the stocks are about 200-day simple moving average. I mean, this was about 30 odd percent month back. One more thing which I would want to sort of highlight is that while we are talking about gold, I think silver also has seen a breakout from the 7-month consolidation. And further upsides are definitely expected given the fact that silver continues to remain in a deficit on a global basis. I think one of the key beneficiaries would be Vedanta. I think Vedanta we had sort of recommended earlier with a target price of 600. Going forward, key monitorable for the markets in general would be again the inflation data from both India and US. FIS flow we need to see because this policy cut was definitely not expected by a lot of players. And I think any development on the bilateral deal with US is going to be a big kicker. But domestic things are getting sort of better. So from that perspective, I think the setup looks positive for the markets.
Absolutely, sir. So, getting back to the RBI policy, where do you think investors can find some pockets of opportunity right now, given this change?
So Vishu, what we have seen, or what I had sort of just highlighted, is that NBFCs are clearly sort of beneficiaries. So I'll highlight certain segments in NBFCs which are looking attractive to us. So affordable housing is definitely one of them, because lower repo rates are going to make home loans more affordable, especially for the low and mid-income borrowers. And definitely it is going to boost the demand for affordable housing finance, because the EMI burdens are going to sort of get lower, and then possibly the delinquencies are also expected to sort of come down. So one stock what we like is again Aadhar Housing Finance with a target price of 550. I think they are already sort of doing well in terms of looking at higher yielding markets where the yields are higher. They're 80% of the liabilities on a floating basis. So obviously, they will benefit from the rate cards. So this is one stock what we like. Overall growth rate expected is about 21 odd percent. Canfin is another which we feel homes should benefit. Target price is 900 again here. So here the 55% of the borrowing is again linked to repo. So obviously with repo rate cut, about 20 bips kind of a benefit is expected. So and this is guiding for about 12-13% kind of a growth. So this is another beneficiary. So housing finance is one. Even the vehicle financiers also benefit, because for vehicle finance, typically most of the vehicle loans are at fixed rates, and the borrowing is on the basis of floating rates. So obviously, most of these players will benefit from NIM expansion. The biggest player is again Shriram Finance. So this company overall target price is 725, can get revised further. So this company has been sort of doing well on the CV side. CV again is expected to sort of do well. Then they are doing better also on the PV side. So with 15% or mid-teen kind of a growth, reversal of the rate cycle, and again 30% of the borrowing will sort of see a positive impact. So that is one. Bajaj Finance, I mean, be it from a vehicle finance or be it from a consumption perspective, is obviously a beneficiary. So that goes without saying. I think one more highlight of the policy was that they have lowered the loan to value ratio for gold financiers. Earlier rate was 75%, that has been increased to about 85 odd percent. And I think this is definitely going to lead to better volume growth for a lot of these players. So Muthoot obviously is one of the top players. So gold prices have also been sort of inching. So that is already sort of helping. And with this relaxation in LTV norms, I think this company would be a big beneficiary. Overall, the stock is available at attractive valuations at about 3.3. And Manappuram Finance is another one which is witnessing a change in the promoter. They had had been sort of witnessing some challenges on their microfinance book, but overall sense is that they would also sort of do at current valuations, which look attractive at 1.6. And last but not the least, you have retail financiers. So Bajaj Finance is obviously there. The other one is that in general, consumption is going to get boost. One of the ways to sort of consume is cards. So SBI card is something which looks attractive, because 75% of their borrowing is external benchmark linked. So obviously that is going to sort of benefit. So SBI card already has been sort of doing well, so that is expected to do well. And one more thing I would want to sort of highlight is again there are some structural measures which have come out in the policy. One is uh, 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 five PSU banks are going to sort of make a loan recovery company. So it will be a common collection agency which is going to sort of recover loans in the retail and MSME side below 5 crores. So again, largely what it means is that the lenders will continue to focus on lending, and then you will have a separate dedicated agency for collections. I think like you have CIBIL, there is a Grameen credit score in the works, and again, this is going to sort of structurally change the dynamics, because we have seen credit discipline getting impacted in microfinance and a lot of other unsecured loan categories. So both rural and microfinance. So I think Grameen credit score is again sort of a step in that right direction. So in general, I think RBI policy has been a big positive surprise for the markets, and rightly so, as reflected in the market levels as well.
Absolutely. What impact do you see on the realty sector?
Oh yes, so real estate was the sector is the best performing sector of the week, and obviously, see, real estate also tends to benefit from this. One, I think, with CRR and repo rate cut, so it is benefiting both the home buyers and also the developers also, because the entire ecosystem sort of benefits from this. Developers also get easier access to finance, not directly through banks, but indirectly. So that is one. Now, coming specific to real estate company, I think overall sense is that while some of the stocks have done well, but we feel that the next 1 or 2 quarters are expected to be better in terms of sales momentum. So I'll again highlight a company like DLF, which is a big player in the NCR region. There we have a target price of 1,000. This company is balancing both the residential as well as your annuity rental portfolio. So this company looks good. Oberoi Realty again has been doing phenomenally well in the Mumbai market, and so they've sold about 22,000 odd crores in this 7 ongoing projects in FY25. And so of that, I think they already have a completed or constructed inventory of nearly 5,000 odd crores. And so again, this is another premium developer which should do well. We are also liking even the mall players. So Phoenix Mills is again, they are looking to sort of build their mall portfolio from 11.5 million square feet to about 14, and further to about 18 in 2027 and 2030. So this is another one which looks good. They are also into hotels also, and they're expanding their office space also. So they're literally doubling their office space from 3 million square feet to about 7 million square feet. I have already highlighted Aditya Birla Real Estate. So that is another company which has been doing very well. They are sitting on a GDV of nearly 50,000 plus odd crores, and they are expected to sort of deliver pre-sales growth in excess of 23 odd %. So that is another one with a target price of 2850. Arvind Smart Space is another company which we like. So this company is expected to sort of generate good amount of cash flows in the next 4-5 years. They've got a good order book also as well. And Max State is again last company. So this is another company, Delhi-based NCR company, again doing very well both on the residential side and also on the commercial side. So this is another company with a target price of 690.
Right. Let's move on to defense, sir. I think in the last few weeks, we have seen some marvelous growth. Do you think the sector is kind of heated right now?
Oh, yes, Vishu, because you pick any defense stock, I think we've seen gains of nearly 40 to 90 odd % in the last 3 months. So while, yes, news flows are positive because post a conflict between India and Pakistan, the government has planned emergency procurement of about 40,000 odd crores. And I think one more interesting highlight was that the defense secretary clearly highlighted that the defense spending should go up from say 1.9% to 2.5% of the GDP, and that's a sort of a significant number because at this point in time, the capital expenditure or capital outlay is only half a percentage, and this needs to go up to 0.8 odd %. So from that perspective, this creates an opportunity of nearly 7 to 8 lakh odd crores in the next 5 years. But you pick any defense stock, on an average, it's trading at about 48, 49 times, so closer to 50 times kind of a P multiple on FY27 basis. So despite all the goodies, the valuations are definitely extremely rich. So which is why I would suggest one needs to be very selective in defense at this point in time. So relative basis where we find valuation comfort is something like HAL, which is trading at about 33 times on a forward basis. There we have a target price of 6,100. Bharat Electronics is a very stable player, again trading at about 38 times forward basis. Midhani is something which we have started to like because management is talking of 20% kind of a growth rate, again trading at about 36 times. So these are PSUs. On the private side, I think Astra Microwave, which is one of the radar suppliers, is trading at about 45 times. So relatively, I think compared to the universe, it's trading attractive. So I think these are 3-4 names. So one needs to be very selective in defense at this point in time.
Right. Thank you so much for that, sir. Next up, we have auto. In the auto sector, I think the May volumes are out, and what do they say?
Nothing much. So overall, when you look at, I think there are such categories like say two-wheelers and tractors, which are sort of doing well. Exports have been a good growth or seen a good growth for most of the players. But specifically, M&M continues to sort of do very well in the PV side and Royal Enfield on the two-wheeler side. And M&M actually also is doing better on the tractor side. So in the two-wheeler side, besides Eicher, TVS continues to sort of do well. They're growing or they've grown their volumes by 16 odd percent. Eicher again has seen a healthy growth of 26 odd percent. Bajaj Auto, the export segment is doing well, 20% kind of a growth rate. Maruti again tepid kind of a numbers, 3% kind of a growth. Tata Motors is witnessing a decline, possibly because of the refresh of Eltros. Hyundai again muted set of numbers are down about 7 odd percent. CV again not very encouraging, I would say, because Tata Motors CV volumes are down about 5%, while Ashok Leyland is doing slightly better at 5% growth. Eicher continues to sort of do very well there. So overall sense is that up till now, the volume growth, what we are anticipating because of the tax rationalization is still sort of yet to sort of get reflected in numbers. So we are hopeful of that. And one more possible trigger would be the 8th pay commission. And obviously, I think RBI policy is also going to sort of help. So I think, again, top bets again would be, say, M&M or Eicher. And I think if Maruti delivers on the number, then Maruti is another stock we would want to highlight because I think we haven't seen much of a volume growth, but in case of the volume picks up because of this rate cut and also because of tax rationalization benefits, then Maruti also could be a beneficiary.
Absolutely. And finally, hidden gem of the week, which will it be this time?
So overall sense is, Vishu, that infra side things should get better. And this is another interest rate sensitive sector. So what I would want to highlight is KEC International. Here target price is 1,050. Now this is one of the major EPC players on the transmission and distribution side. 50% of the portfolio of the company is tilted towards that, and 43% is on the non-T&D side. And on the transmission and distribution side, the company believes that they can grow in the range of 30 to 40 odd percent, and other business about 25 odd percent. Railway is also one of the business, but they're expecting a late revival there in FY27. Now, sense is that this company is sitting on an order book of nearly overall 40,000 odd crores. And the order pipeline is about 180,000 odd crores. And they are expecting order inflow of about 30,000 odd crores. So sense is that they'll start executing it well, especially the domestic side. So that will lead to a revenue growth of about 14 odd percent. We are expecting a slight uptick in the margins. So that should sort of lead to a nearly 49% kind of a growth in the profit, and which is why we are liking this company with a target price of 1,050.
Absolutely. Well, that was it for this time. Thank you so much, Pankaj sir, for your insights, and thank you so much everyone for watching. If you have any questions, please put them down in the comments. Thanks again.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.